Good morning, traders and investors. Today is January 12th. It's a Tuesday. It's the second week of 2021. What do I always say? Let's get into it right now. Mildly higher. That's where the markets are. S&P's up 8. NASDAQ is up 23. Future months are up a little higher. Dow futures are up about 68. Markets are, they can kind of go up or down. There's really not much data till end of the week. Thursday and Friday is when the majority of the federal reports come out. It's going to give us a good idea of how retail sales are doing, whether employment numbers are climbing or not. Retail sales, and consumer sentiment, very, very important. That's all happening Thursday and Friday. Right now, markets are kind of being driven by what Biden may come out and say. He's going to announce his plans, and that's going to be very, very important. So let's talk about global economy really quickly. Then I'll talk about the sector that's outperforming and is almost at the point of breaking out. And then I'm going to give you three, not one, not two, but three hot stocks in that sector. So investors are waiting for details of Joe Biden's promised economic stimulus plan. I can't wait to hear what he's got in store. I'm very excited about this, hoping it's going to cause a good impact on the stock market. Biden promised to announce details this week of the plan he will propose after he takes office January 20th. Just to give you guys some feedback, usually these plans involve infrastructure. Typically, presidents, when they come into the White House, they start out really, think of it as a pyramid. They think really broadly, and then they kind of narrow everything in and shape everything in. So he's thinking foundationally. So this will give us a good idea of what he's thinking. From what I understand, and don't quote me on this, obviously, I'm not I can't predict the future. But from what I understand, he is going to talk about putting a whopping $1 trillion into infrastructure, evergreen, renewable energy type of a sustainable energy type of a infrastructure, which would be very, very welcomed in the U.S. right now. U.S. markets shrugged off the attack on Capitol, I don't even know what to say about that. That's terrible. Stocks in the S&P are expensive. And this is, folks, something you should be mindful of. Not only are we trading at 29 earnings right now, above the 18 times earnings of the past decades, but I want to show you, and this is something you need to pay attention to because this goes along with it, and I show this to you almost every day. All stocks trading above $2. Look at the number of stocks trading above the 200-day moving average, 87 percentile. Look at the number of stocks trading above the 50 percentile, 50-day moving average, 83 percentile. It's getting top heavy, which means we are overdue for a little cool off. I'm not suggesting we're going to have a bear market, but we need to cool off a bit. So I am seeing this reflecting technically and in the sentiment of the stock market. The gains come despite negative U.S. economic news. Employers are cutting jobs last month, a lot of jobs last month. More than they have added since the start of the pandemic. And that's really, really, really negative. And I'm hoping this week's reports are going to turn positive. U.S. and other countries are also face contagion, more contagious types of COVID. And folks, healthy people are not seeing vaccines. My folks who are in their 70s, well in their 70s, they don't have an appointment with the doctor. At least another month, doctors say. Healthy people who are in the workforce, probably another 3 to 5 months. So my question to you is, how can the economy run itself on full gear when the markets are so vulnerable? It could be the stimulus, but I'm going to say we're in a very nervous situation. Democrats are pushing for a removal of Trump, which they're not doing this to make a point. They're doing this so that they're trying to limit his chances of getting reelected in 4 years, and they don't want him to get benefits like security for the rest of his life. That's what the purpose of this exercise is. Because I didn't quite get it. I was like, what's the point of kicking this guy out of the White House on his last week? But it has further ramifications. And shares of Twitter and Facebook fell quite a bit, 6.4% and 4% respectively, after they suspended Trump's account. And I think that might have been a little overboard, especially on Facebook. But hey, I don't want to get into politics. Crude oil is actually trading higher. We're above the $45, $40 that frackers pay to process crude oil in this country. But we still have a glut of crude oil, and supply is grossly outweighing demand. Now, If we look at the 10 major sectors, you will see that the financial sectors are breaking out, and they are the strongest sector. Problem here is, if you look at the high, we're just now reaching the February highs, and I've warned everybody not to get into any stocks, assets, or ETFs unless they're trading higher than this level. So this kind of puts us in a little pickle because we're not trading above this level. But as you could see, we're very, very close. We're like a hair, like less than $1 away. So it looks like financials are going to break through that level. And in light of that, I wanted to show you 3 of the strongest financial stocks that I'm seeing right now. So let's take a look at that right now, and I'll go through them really quickly with you. So that's not financial, that's not financial, that's not financial, that's not here's financial, SIVB. What do you know? And it's the 1, 2, 3, 4, 5, 6, 7, 8th strongest stock out of 500 S&P stocks. As you could see right here, it's a commercial bank. Let's take a look at the stock price. Notice it's well outperforming any levels that we've seen in last February. Let's see, where's last February? Last February is, yeah, why don't I just go a little further in time? Yeah, we're way past. That's the level right there. So that's the February level. That's where this stock is level. It was at 260. Now it's at 430. It's safe to say it's past that level. This is one of the strongest financial stocks right now. And if you look at the profile of the stock, you will see financial services, bank holding, financial holding company, offers diverse set of banking financial, mostly for, I'm going to tell you right now, they deal mostly with non-business entities. Look at the 5-year return, 350%, 1-year return, 72% for a bank, So I like this stock quite a bit. SIVB. You may want to wait for a pullback to the 390 level, but I like this stock a lot. Let's go further on our list. We go further. That's our first financial. Let's go further. Discover Financial Services. My oh mine. I've only been talking about this stock for the last 7 months. Why? Because it doesn't have exposure to businesses. It only has exposures to consumers. Unlike American Express, unlike Visa and MasterCard, it has exposure to only consumers and not businesses, which makes it valuable, because right now businesses are, that's why airlines are not in a good shape, because 70% of all the money that comes into airlines is from businesses, business travel. So this doesn't have any business expenses. It's all people, individuals. Not only are people dying for credit right now, they're paying it back because there's no other way and other cards aren't dealing with them. So Discover is a safety net right now for a lot of people. And that's one of the reasons the stock has been going up. This is where it was in February, and look where it is now, above that level. Not by a big chunk, but by a good percentage. So I like this stock a lot. DFS. Last one, Charles Schwab. Brokers, and this is not a bank, it's a broker. I like it. I like how it's trading right now quite a bit. It's near all-time highs. Let me make sure. We've been seeing record brokerage accounts being opened with Robinhood, and people are just staying home and trading right now. We just recently, look at that, we just now passed the February high. Out of all these 3, I kind of like Charles Schwab the best. The fact that it's taking out the February highs, previous February or March highs, whichever ones they were. Actually, I'm in the wrong place. Those are right here. Sorry. That's what right here. I'm going way back. But the fact that this is taking out multi-month highs is very, very positive. I like Charles Schwab, I like Discover, and I like SIVB. So what did I just take you through? I took you through the broad market. I showed you the major sectors. I showed you what the strongest sector is based on 6-month, 3-month, and 1-month average. Then we went to the cumulative strength index. We organized it in order, and I started going down and finding the 3 financial stocks in the order. And as you can see them here, here's SIVB, here is Discover, and here's Charles Schwab. All of these are in the top, I would say, 20 stocks, 20 out of 500. So they're in the top 2.5%. Charles Schwab, Discover, SIVB, Financial. Before you guys go anywhere, I got something important for you. Listen up. There's a big opportunity coming to the stock market, and you're going to want to cash in on it. The last time market expert Adam Sarhan told you about the company like this, guess what happened? Its share price rocketed from $14 to $29 in 2 weeks. 2 weeks. That's more than 100% return. Now, a new stock has just jumped on his radar, and it's showing the same clear signs of major strength. In fact, shares could pop higher in as little as a few weeks, and there's no telling when or if this stock will ever trade at such discount prices again. Folks, there's some sectors on the move right now. Adam, this guy is an insider. If there's ever been an insider, Adam Sarhan is an insider. He's got his ear and his rhythm tapped to what Wall Street is doing. Click on the link below, learn about this incredible opportunity. Adam Sarhan is hot, and you got to learn about this now. Most importantly, have a great day and follow the link below. Expand your horizons. It's New Year's. Make 2021 the best trading year ever. I'll talk to you guys later. Bye.